We will review the question. We will review the question as we move through the presentation. Welcome, everyone. I would like to begin by acknowledging the Indigenous peoples of the lands that we are on this morning or this afternoon, those of the Matagami and Matachewan First Nations in the Treaty 9 territory. We acknowledge the importance of the lands, which we can call home. And we do this to reaffirm our commitment and responsibility in improving relationships between nations and improving our understanding of local Indigenous peoples and their cultures. The Chamber continues to advocate for Indigenous issues so that Timmins can continue to walk the path to reconciliation together. Welcome to our session entitled Succession Planning, the steps you need to take to exit your business on your terms. My name is Dan Ayat, and I'm the Vice President of the Chamber and your moderator for today's session. I want to extend a special welcome to any business or organization joining us across the 32 Northern Chamber of Commerce. The Chamber continues to facilitate programming under our Reimagined Resiliency, a series to ensure our business can navigate any storm. Under the succession planning pillar, proudly supported by MNP, we welcome David Fitzpatrick and his team, who will guide us through today's session. Transition planning can be daunting for owners of SMEs who lack the appropriate resources. In 2019, the Chamber reported that 73% of Timmins small and medium-sized entrepreneurs lacked a viable succession plan. This came as a concern, as 78% of those surveyed indicated that they would look to sell their business within the coming 5 to 7 years. Access to information on valuing their business ranks second in the list of barriers regarding transition planning. Without accurate information, the process of financing a transition plan and valuing a business can be complex, leaving many unsure of where to start. Access to affordable, confidential, and professional advice is critical when drafting a transition plan to ensure the successful sale of their business. Today, we hope to provide the participants with information that assists in building capacity as it pertains to succession planning. I do want to take this opportunity to mention that those who are on a local Chamber group insurance plan, a reminder that our plan has a retiree plan coverage. Reach out to the Chamber for more information. At this time, I'd like to introduce our guest speaker. David Fitzpatrick is a planner with MNP in Thunder Bay. David is a passionate advisor to small and medium-sized business who work closely with business owners and their teams to capitalize on the opportunities of today for a better, more prosperous future. He is responsible for tax and remuneration planning and oversight of tax filings, working exclusively in domestic tax with a focus on corporate and personal tax planning and corporate restructuring. He also delivers services related to corporate finance, governance, and succession planning. David leads the region in helping clients with the intergenerational transfer of family businesses. He works with a broad range of owner-managers in various industries, including automotive, professional services, real estate, and construction. David earned an honors Bachelor's of Commerce from Queen's University. He is a chartered professional accountant, qualifying as a chartered accountant, and has completed his CPA in-depth tax course. Involved in his community, David currently sits on as a board member and finance chair for the Thunder Bay Kings AAA Hockey Association. David, the floor is yours.
All right, thanks so much, Dan. I'm just going to share my screen to get the presentation.
Looks good, Dave.
Just going to, okay, so we're good?
Yes, sir.
Okay. All right, yes, thank you very much for the introduction. So today we're just going to go over some succession updates and really what's happened in the last 24 months and how that's affected succession. We'll talk about some common approaches to consider when looking into succession, and then we'll look at some elements of good succession, and we'll also do some questions and questions from the audience. So as Dan mentioned, my name's David Fitzpatrick. I'm a partner in the Thunder Bay office. I specialize in tax, and I am also the succession leader for our region up here in Northwestern Ontario. Other contacts and current and local office contacts are Jeanette Nakakashi and Joel Arians. They are both partners in the Timmins office, and if you have any questions or concerns, please reach out to either myself or Jeanette or Joel after this presentation. So what happened in the past 24 months? Obviously, in the past 24 months, there was this thing called COVID-19. And what did that do? Well, COVID-19, it shut things down. Things were opened up again, and then they shut down again. They picked up speed, and then they got shut down again. So overall, what happened was this really was disruptive for all businesses. Didn't really matter if you were hot or cold, didn't matter if you were booming or struggling. COVID-19 somehow, some way impacted your business, whether for the good, whether for the bad. There was some type of impact that COVID-19 had on you. If we look more industry specific, if you look at something like construction, prior to COVID-19, construction was really booming across Canada, especially Northwestern Ontario, and even throughout COVID. That didn't really slow down. It continued to boom and probably even got better. Even with the price of raw materials and lumber going up, construction still was very, very good. On the other hand, you have things like retail and manufacturing. They were struggling. They were shut down for a long time. They had a struggle with the new normal, which meant maybe not as much face-to-face opportunities. It was more moving to an online platform. So it was very difficult for a lot of these retail and manufacturing businesses. So we've seen a lot of businesses and industries struggle to keep up or even struggle to survive with COVID-19. This one's quite important, and I've seen this a lot, is that businesses have been doing a lot more thinking about their own succession planning. This is something that has always happened, but for whatever reason, and obviously it's for the good, a lot of businesses or a lot of individuals have come and wanted to talk about their succession planning. There's likely a fear of what happened with COVID-19 and if it could happen again, or if we're going to ever get back to what life was like prior to COVID-19. And it's really made people think about their future and their retirement plans. And these conversations are extremely important. And if there's anything that's come of COVID-19, maybe this is one of the positives that a lot more people are starting to discuss and look at their own succession planning. Bottom line, with COVID-19, a lot of the rules change and people are going to struggle to make sense of this new reality. We're likely never going to go back to pre-COVID. So we need to adjust and we need to look and see what the future is going to hold. So what are some common plans to consider when we are looking at succession planning? So in reality, the options are really limited. You have your option one would be to sell a business or part of it. Option two would be pass it on to the next generation, whether that be part of your family or whether that be a key employee of your business. Option three, you continue to own the business and really don't do anything. You just you continue to operate it as it was and as it is. And number four, option four, this is where a lot of people are going to fall into, and this is where a lot of our clients typically land. It's a combination of all of the above. So really, there's no cookie cutter succession plan. What needs to be done is every single individual or individual businesses succession plan is going to be a combination of these three options, option 1, 2, and 3, and no two succession plans are really going to look the same. Rarely do you find an instance where you just fall into option 1 or you fall into option 2. Usually you have to use a combination of all three of these options in order to have a successful succession plan. So each option is going to look different for each family and business, obviously, and the options are all going to require different levels of planning and definitely different levels of structure. So what are some elements of a good succession plan? So let's set the stage a little bit here. So we're talking about succession in its full extent. This is where clients have the most questions, and this is where clients get stuck the most. So there's always more layers to decision making. What you need to do is really develop a plan. This plan, there may be more than one plan, and each of these plans that you have may require different skill sets. But what you do need is one overarching integrated plan when you're talking about succession. So I'm going to introduce what's called the circle model. The circle model is something that likely many of you have seen in the past, and really what this is, it captures the essential elements used in any succession planning. The complexity comes in is where these circles overlap for each individual and each individual business or family. So everyone is going to have a circle model that's going to look a little bit different. They're going to overlap in different areas. What you need to do is determine where your circle overlaps and how you're going to make that work with your succession planning. And we'll kind of go through what the family means, what the ownership means, and what the business means throughout this presentation. So any strategic plan boils down to this. It's about the people, what they do together, how their affairs are structured, and how that changes over time. For that, you need a plan. The stakes are too high to approach this important life event without such a plan. So let's take a look at some of the moving parts. So as we mentioned, it's about the people. It's about what they do together. It's about how they're structured. And it's about how all this will change. So if we take a closer look at the family. So when we talk about it's about the people. So anytime you're dealing with some type of succession plan, you need to sit down and look at these questions and come up with answers to some of these questions. So who in the family should make the key decisions? Is there someone in the family that can take over the business where you don't want to look outside of the family? Can they make those key decisions? Who in the family should manage family affairs? This doesn't mean the family affairs for next year. It might mean for 5 years down the road, 10 years down the road, 20 years down the road. Who is that individual that's going to be able to look after the family affairs? What skills does the family require, and how will it develop those skills? So if you have someone in mind within your family to be the successor and take over the business, do they have the skills to do it? And if they don't have those skills, how are you going to train and develop those skills so that they can take over the business? Are there any family secrets to consider when starting the planning process? Who should be included or excluded from the ownership and participation? You might have a situation where you have multiple family members, multiple children, multiple grandchildren and not all of them want to be part of the business, or you don't want all of them to be part of the business. What you need to do is sit down and determine who you want to be included in the succession plan and who doesn't need to be part of that succession plan to take over your business. So what do they do? How well is the family set up to guide, direct, protect the overall wealth? Who wants to stay involved in the family business? You may have a situation where you have one of 2 or 3 children or grandchildren who don't want to be part of the business, but the way your plan is set out is that you want them to be part of the business. That likely won't work, and they may not want to stay involved in the business. So you have to make sure that the people that you are having succeed, you want to be part of that business. Who wants to lead philanthropic initiatives? Who are willing to change, adapt, and who are not? Who will make succession happen or even sabotage it? Some family members may want to see succession happen, and some may not want to see succession happen. So you have to be aware of what each member of your family is going to want when you're starting the succession process. How are they structured? So who's going to make the key decisions? How should the family as a whole and family members own assets together? You might run into a situation where your business is a corporate business and it owns other types of assets like land and building. Do you want your family members or your successor to own all parts of the business, the assets of the business, or just the operations of the business? You need to come up with some type of plan on what your structure, what your ultimate structure is going to look like. What assets you want your successors to be a part of. Similar to this is what tax and legal structures would keep tax low and legal protection high. Again, what is the best way to structure this succession? Does it involve multiple corporations? Does it involve keeping things simple? That is a question that needs to be answered as you're going through this type of succession planning. How is this going to change over time? So what are the key decisions the family needs to make about their own roles? Again, who needs to make that final decision for the family? What is the capacity for the family as a whole and the individuals to adapt to new roles and responsibilities? If you have a child who's wanting to take over the business or get more involved in the business, are they willing to adapt to their new roles and responsibilities? How do you protect family harmony when so many things change? This is very common that there is some type of in-family fighting when you have succession planning or transitioning, and it may be harder to keep the family harmony, but you need to keep in mind that you're doing this for the benefit of the business and the overall benefit of your family. So that may mean that somebody is not going to be happy throughout this succession process. So let's look at the ownership a little bit. So it's about the people. So should non-family members become owners? Do you have a key employee that you want to take over the business or take over part of the business? Is it possible for someone who's not family to start working in the business as in an ownership role? Who are the best people to guide, direct, and protect family wealth? What are the retirement plans of owners? So if you have a owner of a business who's not part of the family, what does their retirement plan look like? Are they looking to retire in 1 year, 2 years, 5 years, 10 years? It's important to know that, especially if you're trying to transition your portion of the business to a family member or someone else. You need to be on the same page as your other owners to determine what their needs are and what their wants are. How much retirement capital does the owner need? So if you have an owner who is looking to get out of the business as well soon, how much capital is that going to require? What does that look like for your business, getting them out of the business and making sure that their needs are met? So what do they do? So who should have the role in the business? Does it have to be only family, or do you want some non-family members to be part of the business and own the business? What limits and responsibilities will different owner groups have? If you do have non-family members coming into the business, how much responsibility do you want them to have? Do you want to give them complete control, partial control, some control? Do you want them to see the operations of the business or have a lot more responsibility? How will compensation be structured? There's a ton of different ways that you could structure compensation. It could be profit sharing plans, there could be bonus structures, it could just be wages, there could be dividend structures. So there are a number of different ways that you could compensate owners that are either both family members and non-family members of your business. How are they structured? How do you protect the business against owner conflicts? You may run into a situation where you have a owner of business who's not part of the family, and there can obviously be conflicts between them and the rest of the family. What can you put in place to mitigate some of these conflicts? Who should own what parts of the business? Again, if you have a business that owns different types of assets, like land and building, do you want a non-family member or a key employee to own that part of the business, or do you want them just to own the operational business? Who should have legal and operational control? How do owners protect majority and minority positions? And how would the owners protect their investment? So how will this change over time? So how will ownership control and significant value transition over time? You may be in a situation where you want to give up some of your business to a key employee now and then transition the rest of this over time, or even to a family member. So how does that ownership control and that transition look? Is that going to be a 5-year plan, a 10-year plan? And how are you going to ensure that you're going to get your value out of the business when you're transitioning this business over time? How will a buyout of the first generation be financed? We see this a lot in succession planning, where someone has a plan, they have a successor in mind, and everything is ready to transition. And then they realize that whoever is taking over the business doesn't have the financing in place to fund the retirement or the transition. And sometimes it's not as easy to go to the bank and get financing to be able to pay for this type of transition. So if that's a situation that you have, then you really don't have a plan, because you don't have a way of getting your equity out of the business. What normally would have to happen in that situation is the person who is transitioning would have to take a mortgage take back and be paid over time. So now you're really banking on whoever's taking over the business to be able to run that business profitably for a number of years in order for you to finally get paid out of your business. So you really need to focus and think about how you're going to get paid out of the your business when you're transitioning it. Can new owners be introduced, and if so, when and how? A lot of people, when they're transitioning their business, they think that it has to all be done all at once. Well, that's not the case. You could do this over a number of years. You could introduce new owners over a number of years, and it doesn't have to be just a one-time thing. So for the business, it's about the people. So does the business have the right people to lead and grow the business? So right now, do you have the people in place in order to make sure that this business continues to grow? Is the business able to hire and retain the best talent? I know from my perspective, our industry and a lot of my clients, this is something that is very difficult to not only find people, but to retain the best talent. I don't think that's just a problem in Northwestern Ontario. I think this is something that everyone in Canada is feeling, even everyone in North America. It's extremely hard to find good people and retain good people. Is a family member participation required in the business? If you have a business that's been family run and operated for a number of years, 20 to 30 years, does it have to be a family member participating? If there isn't a family member, will that hurt the business? Something you have to think about when you're looking at succession plans. How well can the family lead the business? If you do leave the business to a family member, are they the right person to lead the business and to grow the business? Or are you better off looking into key employees to transition in this business? How can family leadership of the business be guaranteed? What do they do? How can the value of business be maximized for future sales? I mean, this is a very important question, and we'll go into more detail on this question a little bit later in the presentation, but obviously this is something that a lot of people have would like to know the answer to. There's really no cookie cutter answer to this question, but we'll look at this a little bit later in the presentation. What financial structure should the business have to pay out the owners? Can the business take on more debt? Do they have the cash flow to pay the owners out when they're looking to have succession? Must the business be led, managed by family or family members? Again, does the business need to be family run, or can it have key employees taking over, or other third parties taking over the business? Do family members have an automatic right to employment or compensation? You may have a situation where you have children who aren't interested in business. So do they automatically have the right to employment or compensation from this business? How are they structured? So how should a business be structured to maximize the value upon sale? Again, we'll get into this a little bit later in the presentation. How do you protect the business against family and owner conflict? How should the owners lead and control the business? What wealth protection strategies are needed when it comes to business risk? And how will this change over time? What is the life cycle of the business if those exiting are no longer driving performance growth? So what drives the performance growth of the business? Is it the current owners of the business, or is there people in place who could take over and continue to drive that performance and growth? And then what governance models will work best for guiding and directing business interests? So these are just a lot of the questions that you need to take a look at, think about, get an answer to, or have at least some type of commentary on in order to develop a strong succession plan. It's a great way to start your succession plan by going through that circle model, looking at some of those questions, and you'll get a lot of answers to your succession plan once you start answering some of those questions. So the bottom line, if you do this only once, then find a good guide who can help you develop a clear plan. So I'm going to go over now some fairly common questions that we get anytime we do some type of succession planning. These questions are always asked. They're very important. They're very good questions. So I'm just going to go over some of the questions that we normally get and some of the answers to these questions. So when is the best time to start planning for succession? So the answer to this question is always now. If you've ever thought about succession planning, the time to start is now. If you have signed up for this webinar, that means sometime, somehow, somewhere you've thought about succession planning. So the time to really start that planning process is now. Over my experience, we've never run into a situation where someone has started succession planning too early. We've only run into situations where individuals or businesses started the succession planning too late. When you start early, there's so much more opportunity and planning opportunities. And you'll notice when you go through your own succession plan is that how you see the plan going, working doesn't always necessarily mean that's how it's going to work. There's going to be some bumps in the road. There's going to be things that take longer than you would have expected. So starting that process now is definitely a good time. A lot of times we were asked, how long does it normally take? There's no way to answer that question. It's going to vary on every different business. But most of the more successful plans are usually between 3 to 5 years in the planning process. So If you're on this call, that means you've obviously thought about succession planning, and this would be a good time to start with your succession plan. So question 2, what are some of the common mistakes you see when approaching succession planning? The most common mistake that we've seen, and they're two, but they're related, is either not starting the succession plan or waiting. The only times we've really seen succession plans really fail is when someone really didn't have a succession plan and has come to us and with an idea of transitioning, and it has to be right away and we don't have time to plan, or if they started the plan, got the ball rolling, but then stopped and waited for a couple of years or a couple of months or whatever that may be. That is usually the biggest mistake that we've seen in succession planning, is just really not either starting it or not carrying it to the finish line. So how do I maximize the value of my business and make sure I can sell it for the highest possible benefit? As I mentioned earlier, this is a very difficult question to answer, and it is something that varies for each different business. There's no correct answer to this question. What I like to tell my clients is put yourself in the shoes of your successor. If you were in their shoes and you were purchasing a business, or you were transitioning into the business as the new owner, what would you like to see? What kind of business would you like to be purchasing? So you need to run your business like you would be purchasing that same business, so that it has a lot of value. It is something that your successors want to purchase, they want to be a part of. You need to, that's really how you maximize the value of that business, is continue to operate it and grow it as much as you possibly can. What is the most tax effective way to sell a business? And what tax implications should I be aware of? So again, this is not something that is an easy answer, and I don't want to get too technical in this answer, but really there's a number of different opportunities that you have when you're selling a business. I'm sure a lot of people have heard of the lifetime capital gains exemption. That is something that can be available to you if you're looking to transition your business. There's other ways that you can transition that are just almost as tax effective as that. You could defer the tax over a number of years. You could spread out the tax over a 10 to 20 year period so that the tax burden is not as high. Again, it goes back to question 1, when to start. If you have the right structures in place, you have a lot more opportunities to have to reduce the tax limitations on a transition or on a succession or on a sale. So if you begin that planning process early, we have a ton of different opportunities that we could take advantage of. This is also typically going to be the key negotiation factor when you're transitioning your business or you're selling your business, is the structure of it. Usually the purchaser wants one thing and the seller wants a different type of something different. So that's going to be a large negotiation factor. And something that was just introduced in 2021 is what we call Bill C-208. So prior to the summer of 2021, if you owned a business and you wanted to transition it to either your children or your grandchildren, you were not able to access the lifetime capital gains exemption. If you took that same business and sold it to a third party in the exact same structure, then the lifetime capital gains exemption was available to you, but you could not do it if you were transitioning to a child or to a grandchild. But in the summer of 2021, they introduced what's called Bill C-208, and now you are able to transition a business from yourself, from your spouse, to children or grandchildren and utilize the lifetime capital gains exemption. So again, there's another planning mechanism, another planning opportunity that is available. The only time you don't have some of these planning opportunities available is if you don't have structures in place, which means you haven't started the succession planning process early enough. I have seen a number of situations where we've had clients transition their business and they've paid hundreds of thousands of additional taxes that they probably didn't have to pay, but they had to pay them because they did not have the proper structure in place, because they did not start the succession planning process soon enough. Do I have to give up control all at once? We've already kind of touched on this. No, you don't have to do that. It's never a all or nothing decision. You could give up parts of control over a number of years. You could give up it over a 2-year period, 5-year period, etc. You could transition the future growth to key employees or to family members, but maintain control of the business. So they're going to run the business, but you ultimately have the overall control of the business, and then you could take that and transition that control over time once you're comfortable with how everything is being running. So when you are looking to transition a business, it does not mean that you have to sell the business or give up all the control all at once. You could do this over a number of years, or there's a lot of different opportunities for you and different planning mechanisms that you have available to you. How do I ensure a smooth transition of roles and responsibility? Again, this is one of the more difficult questions to answer. What I like to tell my clients is try to take a look at yourself in say 3 years from now or 5 years from now, or when you want the succession to be complete. What's the end result that you're looking for? And then now look at the beginning of your process and how are you going to get there? A lot of people will come into a succession planning process and they think that they want to just give up their control of the business and walk away. That may not work in all situations. There may be a situation where you may give up control of the business or transition the majority of the business, but you may have to stay on and work for 2 years or 3 years just to make sure that everything has smoothly transitioned to the new owners. It could become quite beneficial for the former owner to stay on just to show the new owners what the how the business runs and how it can run and operate successfully. Question 7, again, very difficult question, is how do you make it fair within the family? So obviously, if you're on this phone call or this webinar, you've run a successful business over the years, and in order to run a successful business, it's clear that you've had to make some difficult decisions throughout your time, and this may be no different. When you're doing this succession planning process, what you have to keep in mind, sorry, is what the end result is and what you're looking for. You're looking for a plan that helps the family, the whole family, not just certain people's individuals. It's the family as a whole, and your retirement. So if you have a child that does not want to be involved in the business, you really can't force them to be involved. That usually just creates more issues than anything, is when there's someone who is taking over a business who doesn't necessarily want to be a part of the business. At the end of the day, some of these decisions aren't going to be easy, and not everyone is going to be happy with them. If you have situations where you have multiple children that you're trying to and wanting to transition the business to, and one of the children or grandchild don't want to be part of that business, and you're giving a benefit to the one who wants to be part of that business, there are different ways through estate planning that you could make it up to that other child, throughout through your will, through different types of planning mechanisms. So there are ways to make it fair, but just know that you don't have to make it fair in just this succession process. And not everyone is always going to be happy about the end result of this, but as long as you're looking out for the best interest of your business, your family as a whole, and your retirement, then you're doing a good job in this this process. So now, are there any questions from the audience?
Thanks, David. We're just going to bring Danayot back into the fold.
Okay.
There we go. So I'm back. So we do have a question from our audience, and it says, can you talk about appointing an executor to my business in case the worst case scenario happened and it needed to be run to hand off to the next owner?
Yeah, I mean, that's a very good idea. That's a good planning process. You would definitely want to have some type of plan in place prior to this happening. But if you are implementing a plan or starting the planning process and you fear that you may not be able to carry it all the way out, it's very important to letting people know what your wishes are. And that might be appointing an executor to your to that, so that if something were to happen to you, that they could carry out those wishes that you've put in place.
Another question would be, as a business owner looking to exit my business, how can I align my succession plan to meet my personal objective?
Again, that's really a bit of a difficult question, but what I like to normally tell my clients is go through that circle model and try to answer those questions as best as you possibly can, and most importantly, most honestly. When you get those answers to those questions, a lot of times that allows you to align this best to what's best for you personally.
Thank you. And then I'm worried that my designated successor can't afford the deal. How do I have the conversation about whether or not their plan will correctly account for their financial capacity to acquire the company?
Yeah, that's a really tough scenario, and it's something that we've seen a lot of. It's not only not having the cash, or sorry, the amount to pay the original owner, but it's not having access to any financing. So usually in those circumstances, what have to happen is the owner is going to have to take some type of what we call a mortgage take back. So they're going to be paid out by the new owner over a number of years. So a couple things to comment on that is, one is those are important conversations to have with the person that you are looking to succeed your business. You may have talked about everything except for how you're going to get paid. That's a very important conversation to have. If they can't afford it, maybe they're not the right person for to succeed your business. Maybe there's someone else out there. If they can't afford it, doesn't mean that they are not the people that cannot succeed and take over. You'll just have to work out a plan with them on how to get your capital out of the business. And that may be an instance where you get paid a certain amount per year, and if the business does better than anticipated, you'll get a little bit more in that specific year. If it does a little bit worse, then you might not get as much. So there are different ways to approach that, but it is very common for whoever's succeeding to not have the capital to afford just a straight buyout of the current owner.
All right, thank you. In the valuation process of my business, how do I clearly define deal breaker items that I may want to keep once I no longer own the business?
So this kind of goes back to how do you maximize the value of your business prior to selling it. Again, it's going to be different for every type of business. What I like to tell my clients is put yourself in their shoes and what they are purchasing. What would you want to purchase if you were in their shoes? You obviously want to purchase a strong, vibrant business. How are you able to make that a strong, vibrant business? Look back on what you've done in the past to make your business so successful and continue to do that. So when they are purchasing, they're purchasing that's something that's extremely strong. It's very difficult to comment on the deal breakers just because every type of business is going to have different types of important assets or goodwill, etc. So it's not really it's a very specific question to a business.
Thank you. As someone waiting to succeed the business, how can you start a conversation with the current owner who is not exiting within the agreed upon timelines?
Yeah, I mean, I think you kind of said it in that question is you have to have those conversations. If you are the successor and the owner, and you've essentially taken over and the owner's still around, you or the previous owner is still around, you need to have those conversations with that previous owner and just let them know what your thoughts are, obviously in a professional manner, and just let them know what you're thinking and what you think is going to help the future of this business. And that may be for them to take a step back in the business. It's obviously a very difficult conversation to have, but it's certainly something that is important, and it really does need to take place. You may be surprised. There may be a circumstance where you have this conversation with the previous owner and they didn't even know that you didn't want them around anymore, or they were wanting to take a step back, but they didn't know if they could. So just having those open conversations with the previous owner, that would be the biggest benefit.
Well, thanks. I want to take this time to thank David and his team at MNP for joining us as our event partner, pillar sponsor, and presenter today. We value our partnership as we seek to grow our community and ensure that Timmins remains a great place to live, work, and play. If anyone on the line is interested in supporting one of our events, please let us know. Today is just one in a series the Chamber is hosting to ensure that you, the business owner, have the information you need. If you have suggestions for our next topic, please reach out. Register for our upcoming State of Mining event with Newmont Porcupine on March 29th at the Dante Club. To register, visit the Chamber's website. Please enjoy your day, and thank you for your ongoing support and your activities and support of the activities of your Chamber. Thanks, everyone.
Thank you. Have a great day.